JB here. Hopefully that sounds better. I can lower this volume just a little bit. Well, anyway, I was talking about Clear, ticker YOU. So great report last quarter, and the stock gapped higher. I think it was into 35 or so, and reverse course, broke into the 20s, went red to green. And then just a similar setup here this quarter. Another great quarter, beats on revenue, EPS, raises guidance. Not only that, they announced a dividend. It's only 7 cents, but still something. They repurchased 1.5 million shares last quarter, average at 25 and change, 25.19 or so. Just a great growth story. Top line growth of 46% year over year in revenue. Guided the revenue growth to continue for the rest of the year. But there's folks I think just don't believe. Either they don't understand the story, or they don't believe in the story. Similar to how Roku used to be back when it was in its 20s and 30s. People didn't understand Roku, and I think a lot of folks don't understand. Usually, they just think it's a company that is going to provide preferred entry into pass security in airports, where it's totally different. They have technology that can be scaled out for sporting events, concerts. They also are looking to create some kind of another addressable market in healthcare. They talked about that on their shareholder letter, and she talked about it in the conference call. And then the big elephant in the room was a Bloomberg hit piece that came out, I think it was Monday. Monday morning, where they talked about a security flaw in Clear's process that allowed some folks to get in that weren't properly checked. There was no actual verification, and you have report. They said that the TSA is investigating them. Meanwhile, if you don't know Clear is going to partner with the TSA to roll out to help scale out TSA pre-check program. So they're going to get that side of business. So if you're investigating their security and check-in process, why would you allow them to not only do preferred check-in but also be part of your TSA pre-check program? So it just doesn't make sense. So they have a lot of avenues of growth. At the end of this year, they're going to roll out the TSA pre-check program. They're probably going to do some bundles with their Clear service as well. So TSA pre-check, you don't have to take your sneakers off, things like that. So I think there's a lot of upside. Huge. I mean, the company's profitable, no debt, $770 million in cash on hand. Just a great story. But I think there's people look at some of these high growth names. I mean, the company's $3.8 billion, only does, trade 7-8 times revenues? I have to go do the math. Maybe it's less than that. So it's one of those targets, the shorts, they salivate because they probably can create a great narrative and say, wow, all they do is check people in at the airports. Take a look at this. One person got through security. The product's flawed, blah, blah, blah. So that's kind of thing that scares me a little bit. And I think some of the reason why the stock is suppressed, it's like the shorts take advantage of pops to short more. But maybe the dividend helps. No, if you're short, you don't want to be having to pay someone else's dividend, right? So we'll have to see this all plays out. I locked some of my 2980s in. If it holds here and the market kind of finds some footing today, maybe I'll look to get some September strikes to play for a move over 30 in the coming weeks. But it's not. I would love to be so confident to add the calls. It just these shorts, they all get together. They probably call each other. They all have big pockets, and I think they manipulate and pressure the stock together. It's not a great analogy to use. It's a big circle jerk. I got you, you got me, and they all just pile in on these stocks. They've done it. They did it with Tesla. They did it with Trupanion, was a name back in the day. And I would not be surprised if one of these shorts went out and contacted Bloomberg and submitted a tip to get them to write this hit piece on you. So wish I had more confidence yesterday when it was trading at $22, but those are some of the concerns I had where I didn't want to. There's no reason to throw money. I already had to throw money away when I already have some calls on the table. I'll still continue to hold my strikes, and which we're up quite a bit more than they are right now, and maybe look for some other opportunities. Take a look at Weight Watchers. Kind of hanging here. It is down the last 2 days, but considering where it's come from, trading above that 10 handle for quite a few days now, you can kind of construe that as somewhat as a bull flag, but they do have earnings tomorrow after the close, so there's some risk there. I'm in the midst of trying to put a nice little post together on some of the reasons why I think this can go to 20, 30, 40 bucks in the coming months. But it doesn't make sense to put that work in and then find out that narrative is that the story is not set in stone yet because of the data that's going to be out tomorrow, the earnings. So you would think the new CEO who came over from House Party, she's going to discuss the Sequence acquisition in more detail because now they have another quarter under their belt. You go and look at Google Trends and Ozempic, they always talk about Ozempic face. So Ozempic's the weight loss medication that makes your cheeks look, I guess, sullen in. It makes your skin just not a good look because you lost weight at a rapid pace. Your body, typically your skin shrinks as you lose weight, but when it's at a higher or faster, quicker pace, your skin doesn't have the time to shrink back. So it makes you have Ozempic face, they call it. But if you look at the trends, sequence comes on as a breaking search term for Ozempic in some of the searches that I looked up. So there has to be some huge progress made. Association with a company that's been around 60 years, great brand name. People look at Weight Watchers and think it's a zero because of their debt. They have $1.5 billion in debt, $150 million in cash, declining membership base. But that membership base has been plateauing, so it looks like possibly by the end of the year that the membership base is going to actually start growing again. And now you have another addressable market, this clinical side with medicine. People also think that they might have alienated a lot of their customer base, people who've been loyal members for years, where Weight Watchers preaches health and healthy diet and exercise and doing the right things, having a nice support base. They never got into the hype of some of these drugs. What was it, fen? I forget some of these drugs that have come out over the years for weight loss. They've kind of shunned those, but now all of a sudden they acquire a company that's their job, is to get the clinical side of weight loss, to have people take medicine. But I think Weight Watchers is either they're going to adapt or they are going to be irrelevant in the coming years. So why not leverage 60 years in business with a great brand name, a huge lapsed customer base, which millions and millions of folks that they can reach out to, people who've probably been unsuccessful in the past, and they can email and say, hey, we have a new program. Not only do you get the coaching and the diet, but you have the opportunity, if you qualify, to use some kind of a weight loss medicine to help you on your journey. People look at it, I think they're looking at it the wrong way. So if they're able to continue to spin that, and this lady she founded House Party, which is pretty much a Zoom, back in COVID, sold it for like $50 million. She knows tech. She knows how to build an online community. She knows all the digital side, which I think was somewhat lacking with the Weight Watchers solution. So if she can bring this all together, I think there's a huge opportunity. The 20, 30, 40 bucks, the huge short interest probably maybe exacerbates that a little bit. But it's kind of the thought process there in Weight Watchers. I'll continue to hold the strikes I have. There's no reason to go all in. That's not my type of trade. I already locked some of my strikes in to cover costs, I think for like 300% to October's, and it's some January's. I'll continue to hold those and possibly add some more after earnings Friday morning. So that's Weight Watchers, clear. Fiverr, what else to say here about Fiverr that I probably haven't already said if you haven't heard my rants? Just a name that's getting thrown out with the bathwater on this AI revolution, where people think their product and services are going to be irrelevant because of AI, right? So Weight Watchers is going to be irrelevant because of weight loss drugs. Weight Watchers, and Fiverr is going to be irrelevant because of AI. So if you go to Fiverr, back in the day, you would have people, maybe you look up some kind of, let's say you want to have a paper written for you. You go on to Fiverr and someone's going to write a paper or proofread a paper or do things like that. Now you just go to ChatGPT and just, hey, write an article for me based on this and this and this. So people think because of that, it's going to take a lot of the revenue away from Fiverr, because there's solutions out there that don't cost money anymore. I think it's the reverse. I think AI is going to accelerate their growth as people looking for ways to maximize AI's potential, whether it be AI art. If you go on, I use that as an example. AI art on Fiverr, I think, has like 10,000 jobs listed. So just imagine the demand. If there's a supply of 10,000 people who have gigs for AI art, there's got to be huge demand. And then on the other side, there was AI content proofreading, like content. So if you look, people are out there and saying, I will proofread content created by AI to make it look more human or to take errors in proofreading. And there's many other examples of how Fiverr's going to be able to, I wouldn't call it exploit the AI boom, but to be able to not only be able to get past some of the gigs that might not be prevalent anymore because of AI that have been displaced, and then be able to leverage the other side of it. So I think especially down here, multi-year lows almost, I think Fiverr's, if there's a beat and raise, and they beat and raise last quarter, but again, people are selling it off based on concerns around AI. I think if they're able to alleviate those concerns and the stock is a beat revenue, EPS, a decent raise or even a big raise, I think the stock trades well into the 30s, if not 40s, in the coming weeks. So that's my FVRR bull case. Great story, I think. And it's the future, right? The future of work has been the gig economy, the Ubers, the Lyfts, the DoorDash, that was one side. And then you have the other side here, which is digital services that can be performed a la carte, right? Just a great platform, I think. TripAdvisor, I mean, what else to say about Trip here? I already locked some of my calls in yesterday, the day before, and I'm going to wait for their earnings report. Trip has a history of just not doing well during earnings. So, look at Edit's going. Interesting. They reported earnings today, Edit. So, I'll talk about Edit in a second. But anyway, so TripAdvisor, and I've said this many times, I mean, it's got to be even more now, 400 million or so unique users, visits on their website a month, and somehow they're unable to monetize it. They tried to do Trip Plus. I don't know how that hasn't been panning out, but at some point the bottom's in. It's going to reverse course. They're going to start monetizing that base, and it's in the 20s. So I think a nice beat and raise is 20s. In line, maybe it's low 17s, and any kind of miss and it's back under 16. So already riding them free. I'll just hold those into the report this afternoon. So Trips tonight, Weight Watchers tomorrow afternoon, tomorrow morning's FVRR, and then also you have Tandem Diabetes, TNDM. The stock went all the way up to 37 or so last Friday after Dexcom's earnings, and then it's just been getting destroyed. Another name that you might want to look at as a name that could be impacted by Ozempic and whatever the name of the other two ones, because of, Tandem's all about diabetes, and if there's solutions out there that can take care of diabetes, and Tandem doesn't have as much of a addressable market. So I think that's some of the reason why the stock is down where it is, but they announced a new product approved by the FDA, a micro pump. It's the smallest pump on the market. It's supposed to be out in the fall. That could certainly add a new revenue stream. I think it trades over $40, any inline number. So that's Thursday after the close. Yeah, so Edit, it's running today. Let's see here. I don't even know what was on the update because I missed it. But they've been revamping their director, the management team. I think they got a new CEO from Pfizer. Where did I see all this stuff? This is a while ago. But just the name, it just can't get going. They did a $125 million offering a month and a half ago. Yeah, just one I probably stay away from. For me, I will. But, I mean, it could be one of those names that goes 10, 15, 20 bucks in the coming weeks. So certainly I'll watch that. If anybody remembers, if you traded back in 2009, 2008, 2009, I remember the bottom in March of 2009. It felt like you would think like we were going to go down to nothing, right? And there were all these articles people would post, and we were already down, 50% in the market, and people would post, the Dow's going to, 100 or some crazy stuff, and it almost seemed like at the time with everything going on, you say, wow, that's plausible. So in 2011, when we had the debt downgrade in August, we were still kind of getting through the 2008, 2009 jitters. Things were still working. People thought we weren't out of the woods yet. Nobody thought the market would embark on a crazy bull market. So it was kind of a setup. I put it in the watch list this morning. It was as if someone was sitting, the market was sitting at the top of a cliff waiting for someone to push them off. And then that debt downgrade came from, their credit rating downgrade from the S&P came out, and that was just someone that pushed them down the cliff. And the market was already off like 5% in July, at the end of July into August, and then it dropped another 10% in a matter of a couple weeks. I remember this is back when Bookings.com was Priceline, and Priceline was $1,000. 4 days later, it was $400, and there was like all these other stocks I remember that were just got cut in a third, cut in half in a matter of like 5 days. It was very nasty. But then things bounced around, and of course you see where we are now. I think things are just a little different now, but it's unfortunately the market's been on such a big run that something like this kind of takes the wind out of the sails, gives people a reason to take some profits. Now we have the 10-year hitting levels not seen since November. That'll be a whole nother story. And then as yields go up, you have to think, where does it, the government has to finance their debt. So the higher the rates go, the more it costs to finance their debt. It becomes one of these things where at some point financing the debt's going to be insurmountable unless something changes. So anyway, so interesting stuff. Back when they did the debt downgrade in August of, I think it was August 5th, 2011, it was a Friday afternoon, and then Saturday and Sunday markets closed. So all you had were all these articles, and then the market gapped lower on that Monday, and I think it was down 3 or 4%. Hopefully we don't get to that point today. We find some footing here, 450 or so, and the SPY can at least melt higher for the rest of the day. I think that's about it. I'm trying to think of some other names I've been watching. Fiverr, Trip. Oh, Roku, right? Again, it's finally people understand the Roku story. It's selling off today down here at $91. But what a great quarter. Surprise, the stock went up. Started, I think it opened at 78, ran all the way up to 89 last Friday. And then the last 2 days held the gains and put on another 1 and 2%. But here's down here at 91.80. If it finds a floor here, maybe in the afternoon I might look for some lottos, 95s or so, to play for a move back over 98 and possibly 100 to end the week. But it's just one of those stories people don't understand. Then they see the earnings. Some things of note, that they have a screensaver now. Similarly, if you're on Netflix and you're not watching any content, the screensaver comes up and they post their different shows that are out and popular shows. Same with Disney Plus, but that comes over as a scrolling bar at the top. But with Roku, they're coming out with an ad-supported screensaver. They actually have it, and it's over. I haven't called oversubscribed, but there's a lot of folks interested in that because that's pretty much the launch space for all the content. So the different content providers, the Maxes, not HBO Max anymore, Disney Plus, Amazon Prime, Netflix, so on and so forth, Peacock. So that was one of the big surprises, and then their Roku channel, which they said has 1% of the entire streaming of all the video streaming. And you took a look, I think Netflix was like 9%. So when you have a company that's hundreds of billions of dollars and Roku's only $9 billion, then you start doing some math and say, wow, this is undervalued. Obviously, it's not as undervalued now here at $92 as opposed to when it was in the 60s. But I have to think, maybe it continues to run. So that's Roku. I'm trying to think of some. So I'll continue to look for that one for some upside. Trying to see some other ones here. Wow. Some of the names, it seemed like last Thursday, we had that sell-off. So midday, Japan came out with there were reports that Japan is now open to raising rates for the first time in decades. Japan has been, and they already had a lost decade of inflation, and because of no inflation, and they continue to struggle with it, but finally, inflation is nearing about 3% for Japan, so maybe they're getting some concerned. So there's some talk that they might raise rates. If that's the case, then people might pull out of U.S. debt to buy Japan debt, the number 3 economy. So that's caused some concern on Thursday, saw the big sell-off. But all these growth names, which had been on tears, just got demolished on really no volume. And the similar thing happened a little bit yesterday, and it's happening again today. So I don't know if this is the start of a little bigger pull into September, or we'll have to see. I always like Zyme, but that's a name just hasn't done well. I'm trying to think. There were other names. Oh, Ulta. So you had Elf report a monster earnings beat and raise yesterday after the close. Down here at 133. So maybe Ulta's a nice play. If it sells off today, I think it's like 12 days in a row to the downside. So and the thing about Ulta, it had a great earnings report, and the stock got sold off, and then it bounced in during June, and then once July started, it sold off again. And you have to think that the Elf earnings maybe bodes well for their report. I think Ulta reports like August 28th. I was looking at calls today, but I just trying to be a little selective until we find a bottom. Well, till it settles down a little bit. And I don't know if we found a bottom just yet, but hopefully the SPY can hold its ground for a little bit. I think that's it. I'll try and get on audio again later. Thanks for listening. Let's have a great day. Rock and roll.